Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a session that displayed a whipsaw price action, the market is slightly firmer, and given the Dragonfly Doji and the break of the RSI through the midway point has added to further momentum and now supports the topside challenge around 64.75 to 85. Above there, if breached, looks towards that 60-day moving average, which is seen at 65.35.50, which I still favour to the contest. In light of the strength of the technicals, and along with that, eyes look towards this week's economic calendar, which is relatively busy, and focusing on Wednesday's Australian Consumer Price Index, the CPI, while also across the seas. In the US, we also get an update on the economy's performance with the release of the first quarter US gross domestic product, GDP, which is scheduled to be released on Thursday. Along with that, we do get the latest reading of the Fed's preferred inflation gauge, the Core Personal Consumption Expenditures PCE price index, which is scheduled for Friday. Any pullback should find bargain hunters around 64.10 to 63.75. With the euro also edging higher, the Fed policymakers are currently in a media blackout period leading up to their policy meeting on May the 1st. Therefore, could turn to the technicals for the euro as it now looks towards that midway point, and the break marrying to the MACD would give further gains on towards the challenge of 107.10.15. It is assessed from there that a break would give further momentum onto 109 to 110, with any pullback likely to be shallow, with support seen at 105.80, with the base seen at 105.15.35. After a whipsaw price action again, dollar yen is still persisting to push higher, but finding resistance currently at 154.90.95. In light of the decline in the RSI, bearish divergence in both the indicators, that is the MACD and the 3-period look back for the RSI, could see eventually a significant downturn and re-challenge this level at 153.70.75. That was rejected on Friday and left a hanging man. If we do see a break, that would expose the next area around 150, 50, 80 and reassess from there. Sterling also took a step to the downside at its key level of 123.15.25, but closed above there in New York. Given the fact that there is a little bit of divergence, the market is expected to show a recovery from this base given the rejection and look up towards 124.15 to 124.80.90. Turning to gold, the market has taken a significant downturn after taking out levels of 2,360 and 2,314 to 16 being the uptrend. And from there it exposes the next level around 2,260.70. In light of how the technicals have formed, with a heavy RSI still weighs on the market and therefore should drag prices lower and reach eventually its objective, as I mentioned, at 2,260.70. Any upside contest should find resistance around 2,311 to 2,319. Wrapping up with oil, after the whipsaw price action, it is attempting to try and recover, but I still feel the downside is the main risk, and that is towards $79.80.90 and reassess from there. Nevertheless, I feel that from the given whipsaw price action, the failed upside attempt on Friday and the rejection at $85 a barrel does weigh on the market. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.